Before we dive in, a quick but important note. The information in this video is for educational and entertainment purposes only. We are not financial advisors, and this presentation should not be considered as financial advice. Insurance rates and policies are highly individual and can vary dramatically based on your personal circumstances, location, and many other factors. Always conduct your own research and consult with a qualified insurance professional before making any decisions. There's a car insurance company in America that operates like a secret society. You've probably heard its name whispered with a certain reverence, USAA. It doesn't run those goofy billion-dollar ad campaigns with talking lizards or quarterbacks. Doesn't have to. For decades, it has been the undisputed champion, the gold standard, consistently ranked #1 in customer satisfaction, claim service, and loyalty by nearly every metric that matters. Its members are so fiercely loyal, they talk about their insurance company the way people talk about their favorite sports team. It's an exclusive club, and for those inside, it promises not just a better price, but a better experience. But here's the million-dollar question that nobody seems to have a straight answer for. In today's hyper-competitive world, is the legend of USAA still true? Or is it just a myth? A legacy brand coasting on a reputation it built 50 years ago? Have the modern Goliaths, the Geicos, the Progressives, the State Farms with their powerful algorithms, slick apps, and relentless innovation finally caught up? Or maybe, just maybe, have they surpassed the old king? That is the question we are going to answer definitively in this video. We are putting USAA under the microscope and pitting it against its biggest rivals in a no-holds-barred, head-to-head showdown. We're going to peel back the layers of marketing, tear apart the policy documents, and analyze real-world data to find out who truly offers the best value for your hard-earned money. By the end of this, you will know whether you should be fighting to get into USAA, or if you're actually better off with the company you already have. This is the ultimate guide you've been searching for. So first, what even is USAA? To understand the hype, you have to understand its origin story, because it's not like any other insurance company on the planet. Picture it. San Antonio, Texas, 1922. A group of 25 U.S. Army officers are trying to get car insurance. But the insurance companies of the day took one look at them and basically said, "No thanks." They considered military officers a high-risk group, constantly moving, often young, and seen as unreliable customers. So these 25 officers did what military personnel do best. They adapted and overcame. They decided if no one would insure them, they would insure each other. They pooled their own money, formed their own association, and called it the United Services Automobile Association, USAA. From its very first day, it was built on a fundamentally different principle. It wasn't a corporation trying to squeeze profits for shareholders. It was a reciprocal inter-insurance exchange. That's a fancy way of saying it's owned by its members. The people who pay the premiums are the owners. This means that instead of profits going to Wall Street, they're supposed to go back to the members, either through lower premiums, better service, or even annual distributions and dividends. This structure is the bedrock of the USAA legend. The entire company is designed from the ground up to serve a very specific community: the U.S. military and their families. This shared bond, this common background, is their secret weapon. It's why their customer service is legendary. The theory is they're not just talking to a customer, they're talking to a fellow member of the military family. But this brings us to the single biggest, most misunderstood, and most controversial aspect of USAA eligibility. This is the velvet rope, the gatekeeper. You can't just go online and sign up. You have to qualify. You have to be in the club. And for millions of Americans, this is where the confusion starts. They've heard it's for the military, but the details are murky. So let's clear this up right now, once and for all. This is the eligibility gauntlet. First, the most obvious group: active duty, Guard, and Reserve members. If you are currently serving in any branch of the U.S. Armed Forces, you are in. Simple as that. Air Force, Army, Coast Guard, Marine Corps, Navy, and now the Space Force. You are the core of their membership. Second, veterans. This is a big one. Anyone who has served in the U.S. military and has been honorably separated or retired is eligible. It doesn't matter if you served for 4 years or for 30. It doesn't matter if you served in wartime or peacetime. If you received an honorable discharge, you have a lifelong ticket to join USAA. This is a critical point. Your service, no matter how long ago, grants you access. Now, here's where it gets really interesting and where millions of people who qualify don't realize it. The eligibility extends to family. Let's talk about spouses. If you are married to a USAA member or an eligible service member, you are also eligible. This also includes widows, widowers, and even unremarried former spouses of USAA members. Think about that. If you were married to a service member who had USAA, and you later divorced, as long as you didn't remarry and they started their USAA membership during your marriage, you can often retain your own eligibility. That is a detail almost everyone misses. And finally, the one that passes the legacy down through generations. Children. If your parent is or was a USAA member, you are very likely eligible for the rest of your life. This includes stepchildren as well. It doesn't matter if your parent is active duty, a veteran, or has passed away. As long as they joined USAA, their eligibility can be passed down to you. This means there are millions of Americans walking around today with no direct military connection themselves, but because their father served in Vietnam, or their mother was in the Air Force for a few years in the 1980s, they have a golden ticket to join. They just don't know it. Grandchildren, cousins, nieces, and nephews are generally not eligible. But the direct line from parent to child is the key that unlocks USAA for generations. So the promise of USAA is built on this foundation. An exclusive member-owned organization dedicated to serving the military community with lower prices and unbeatable service. That's the sales pitch. That's the legend. On paper it sounds perfect. They claim their rates are lower because they don't have to generate profit for outside investors. They send back a portion of their profits to members through something called the subscribers account. They claim their service is better because their agents understand the unique challenges of military life, like sudden deployments or moving across the country every 2 years. They offer a whole suite of financial products, from banking and credit cards to mortgages and investments, promising a one-stop shop for your entire financial life. This is the promise. This is what you're trying to get access to, but a promise is just words. The reality can be something else entirely. Has USAA's exclusive focus allowed them to fall behind the technology and pricing wars being waged by their mainstream competitors? Has their service quality dipped as they've grown into a massive financial institution? And most importantly, does being a member-owned company actually translate into real, tangible savings for you? So, we have the legend, the exclusive entry requirements, and the incredible promise. But does USAA actually deliver? Or have the giants like Geico and Progressive, with their massive advertising budgets and tech innovations, finally caught up? Or even surpassed the legend? To find out, we have to look at the one thing that matters most when you're staring at that bill, the price. And the numbers we found might just shock you. So we rolled up our sleeves and did the work. We didn't just grab a few numbers from a marketing brochure. We went deep. We pulled dozens of real quotes for real people in different corners of America. We created 3 distinct driver profiles that represent a huge slice of the U.S. population to see how USAA stacks up against the giants: Geico, Progressive, and State Farm. We wanted to know once and for all who really offers the best price. Our methodology was simple but rigorous. We chose 3 states that tell a story: Texas, a massive and diverse market; Florida, notorious for its high insurance costs; and Ohio, a more stable, representative middle American state. Then we created our drivers. First, meet Alex. Alex is 22 years old, single, and living in Austin, Texas. He's got a clean driving record and drives a reliable 2018 Honda Civic. He's just starting his career, so every single dollar counts. This is the demographic that gets hammered on insurance costs, the group that companies see as high risk, regardless of their actual driving habits. This is where the battle for the budget-conscious customer is won or lost. We ran the numbers for Alex, asking for standard liability coverage plus comprehensive and collision with a $1,000 deductible. The baseline. We started with the legend itself, USAA. Their 6-month premium for Alex came in at $987. Not bad considering his age. For a young driver, staying under that $1,000 mark for 6 months feels like a win. It's a solid, competitive number that sets a strong benchmark. USAA is clearly in the game. But then we went to Geico. The Gecko has spent billions telling us that 15 minutes could save us 15% or more. For Alex, it wasn't just marketing hype. Geico's quote came back at $842. That's $145 cheaper than USAA. For a 22-year-old, that's a new pair of sneakers, a few nice dinners out, or a chunk of change to put into savings. Suddenly, the USA legend looks a little shaky. Next up, Progressive. With their aggressive online tools and Flow's constant presence, they are a dominant force, especially with younger tech-savvy drivers. We plugged in Alex's information, and the number that came back was staggering: $791. That's $51 less than Geico, and a whopping $196 less than USAA. That's nearly $400 a year in savings. For someone like Alex, that is a game changer. It's the difference between making ends meet and having breathing room. Finally, we checked with the good neighbor State Farm. Known for their agent-based model and long-standing reputation, they're often perceived as being more expensive. And for Alex, that perception held true. Their quote was the highest of the bunch, $1,054. So for our young driver in Texas, Progressive was the undisputed price champion. With Geico as a strong second, USAA, the company built on value, came in a distant third. This reveals a critical truth. USAA's pricing model may not be optimized for the young, single-driver profile. Companies like Progressive and Geico have poured immense resources into analyzing data for this specific demographic, and it shows. They're willing to be incredibly aggressive on price to capture that customer early in their life. For Alex, the choice based purely on price is crystal clear, and it isn't USAA. But that's just one profile. Let's complicate things. Let's look at the heart of the American market. Meet the Millers. They're a married couple in their mid-40s, living in a suburb of Orlando, Florida. They have two cars, a 2022 Toyota Highlander for the family trips and a 2020 Ford F-150. They have excellent credit and a perfect driving record. But they have a secret weapon of insurance cost destruction. A 17-year-old son, a newly licensed driver on their policy. This is the scenario that gives parents nightmares and insurance actuaries spreadsheets full of terrifying numbers. This is USA's home turf. The stable, multi-car, multi-driver family with the military connection. This is where they are supposed to dominate. We ran the quotes for the Millers, keeping the same solid coverage levels. We started with USAA. The 6-month premium was $2,150. Now that sounds like a lot of money, and it is, but for a family with a teenage boy in Florida, that number is actually incredibly competitive. It reflects deep discounts for bundling, loyalty, and the parents' clean records. This is the USAA that members rave about. So, could the competitors even touch that? We went to Progressive first. After their stellar performance with Alex, expectations were high. The quote for the Millers came back at $2,780. That's over $600 more expensive than USAA for the same 6-month period. An extra $1,200 a year. The tables have completely turned. Progressive's algorithm, so finely tuned for the single driver, seems to view the 17-year-old as a much higher risk, pricing them almost out of contention. How about Geico? Could the Gecko work its magic for the family? Their quote was better but still not close. $2,420. Still nearly $300 more expensive than USAA. We're talking $600 a year that the Millers could be putting toward college savings or a family vacation. Finally, we turn to State Farm, the good neighbor, the company that prides itself on personal relationships and ensuring families for generations. Their quote was shockingly competitive, $2,195. Only $45 more than USAA. This is a virtual tie. State Farm, with its massive agent network, proves it can absolutely go toe-to-toe with USAA for the core family demographic. For the Millers, the choice is between two titans offering nearly identical pricing. The value proposition is no longer just about the bottom line. It's about the other factors. This brings us to our final profile, and perhaps the most interesting one. Meet Brenda. She's a 68-year-old widow living in a quiet town in Ohio. She's retired, has a perfect driving record spanning decades, and drives a 2021 Buick Enclave. Critically, she's a low-mileage driver, putting less than 5,000 miles on her car each year. She values safety, reliability, and trust. This is another demographic that has historically been USAA's bread and butter. We ran the numbers for Brenda. USAA's quote was excellent. A 6-month premium of $410. It's a fantastic rate that rewards her for a lifetime of safe driving. It feels fair, respectful, and exactly what you'd expect from a top-tier company. It seems unbeatable. Geico came in slightly higher, at $455. State Farm was in the same ballpark at $460. It seemed like USAA was the clear winner for our retiree. But we hadn't checked with one more company. The company that has invested more in technology and usage-based insurance than almost anyone else, Progressive. We got their standard quote first, which was $430, placing them solidly in the middle of the pack. But then we clicked the little box for their snapshot program. the telematics device that monitors your actual driving habits. Assuming Brenda is the safe, low-mileage driver her profile suggests, Progressive's estimated quote plummeted. The new 6-month premium, $320. Let that sink in. That's $90 cheaper than USAA. For a senior on a fixed income, that saving of $180 a year is significant. It's a month's worth of groceries. It's a few special occasion dinners with her grandkids. Progressive's technology completely changed the value equation. By being willing to prove she's a safe driver, Brenda could get a rate that USAA's traditional models simply couldn't match. So what did we learn? The idea that one company is the cheapest is a complete myth. The crown for the best price is constantly shifting, and it depends entirely on who you are, where you live, and how you drive. For young Alex, Progressive was the runaway winner. For the Miller family, USAA and State Farm were locked in a dead heat, leaving the others far behind. And for Brenda the retiree, USAA offered a great traditional rate, but Progressive's modern, tech-based approach offered even greater value. The numbers are clear. USAA is not always the cheapest car insurance. In fact, for many people it won't be. Their dominance on price has been seriously challenged, and in some cases, completely eroded by competitors who are faster, more technologically advanced, and more aggressive in targeting specific types of customers. So if USAA isn't always the cheapest, why does it consistently have the highest customer satisfaction ratings in the entire industry? Why do its members talk about it with a loyalty that borders on religious? Because a cheap price is absolutely meaningless if your insurer vanishes when you need them most. The real value of an insurance company isn't found on the bill you pay every 6 months. It's found in the chaotic, terrifying, and stressful moments after a crash. And that's where we go next, the claims process. This is where heroes are made, and where nightmares begin. The sound of crunching metal and shattering glass is a sound you never forget. In that split second, your world is a chaotic symphony of airbag deployment, the blare of your own horn stuck in a terrifying loop, and a sudden violent stop that throws you against your seatbelt. Your heart is pounding in your ears, a frantic drumbeat against the sudden, eerie silence that follows. You smell acrid smoke from the airbags. You see a spiderweb of cracks across your windshield. Your first thought is, am I okay? Your second is everyone else okay? But a third thought, a cold and practical one, pushes its way through the adrenaline and the shock. My car. My insurance. What happens now? This is the moment of truth. Every premium you've ever paid, every policy document you've ever signed, it all comes down to this one phone call. You pull out your phone, your hands shaking, and dial the number on your insurance card. And the person or the automated system that answers on the other end of that line will define the next several weeks, or even months of your life. They will be the architect of either your relief or your nightmare. Let's play this out 2 ways. In scenario A, you're with USAA. You call the number. A real, empathetic human being answers, often on the first or second ring. Their first question isn't, "What's your policy number?" It's, "Are you in a safe location? Is anyone hurt?" They are trained for this moment. They are calm, they are reassuring. They walk you through the immediate steps. Call the police, exchange information, don't admit fault. They've already started your claim before you've even hung up the phone. They might even help you arrange a tow truck or a rental car right then and there. The voice on the other end of the line isn't just a call center employee. It feels like an ally. Now let's look at scenario B with a hypothetical major competitor. You call the number. You're greeted by an automated menu. For a new claim, press 1. You press 1. You're put on hold, listening to repetitive, tinny music while your anxiety skyrockets. When you finally get a person, they're following a script. They're efficient, yes, but they're impersonal. You're a number, a data point in their queue. You give the information, they type it into a system, and they tell you an adjuster will contact you within 24 to 48 hours. And then you wait. The tow truck driver is asking you where to take the car. You don't know. You have no rental. You're standing on the side of a busy road, feeling completely and utterly alone. This initial interaction, this first notice of loss, sets the entire tone for the claims experience. And year after year, this is where USAA builds its legendary reputation. In the 2023 J.D. Power U.S. Auto Claim Satisfaction Study, USAA scored 900 out of a possible 1,000. To put that in perspective, the industry average was 873. The next closest major competitor was Amica Mutual at 889. While a 27-point difference might not seem like much on paper, In the world of customer satisfaction, it's a Grand Canyon. It's the difference between feeling cared for and feeling processed. But the first call is just the beginning. Next comes the adjuster and the estimate. With many large, publicly traded insurers, the goal is often speed and cost containment above all else. You might be pushed to use an app to take photos of your damage for an AI-generated estimate, an estimate that can often feel suspiciously low. The adjuster assigned to your case might be handling hundreds of other claims, juggling calls and emails, making it difficult to get a straight answer. They may work for a third-party company contracted by your insurer, meaning they have no real connection to the company you pay your premiums to. USAA's model is different. They rely heavily on their own network of salaried adjusters. These individuals are often empowered to make decisions on the spot. They work for USAA, they're part of the culture. The company also operates several state-of-the-art claims processing facilities across the country where you can take your car for a one-stop shop experience. An adjuster inspects the vehicle, writes the estimate, and you can even pick up a prearranged rental car right there on site. This streamlines a process that can, with other companies, involve a frustrating game of phone tag between you, the body shop, the rental agency, and an overworked adjuster. Then comes the most contentious part of any claim, the settlement. This is where the money is. If your car is reparable, will the insurer approve the use of original equipment manufacturer or OEM parts? Or will they insist on cheaper, aftermarket parts that your mechanic warns against? If your car is declared a total loss, how will they determine its value? This is where nightmares are truly born. We've all heard the horror stories. An insurance company offering you $5,000 for a car you know is worth at least $8,000. They send you a list of comparable vehicles for sale that are 100 miles away, have higher mileage, or are in worse condition. They know that you're vulnerable. You need a car, you need the money, and they bet on you being too tired and stressed to fight back. They bet on you taking the lowball offer. This is a calculated business decision for many insurers. Every dollar they don't pay you is a dollar that goes to their bottom line, a dollar that pleases their shareholders on Wall Street. But USAA doesn't have shareholders. It's a member-owned association. Its primary directive isn't to maximize profit for investors. It's to serve its members. This fundamental structural difference has a profound impact on their claims philosophy. Anecdotally, and backed by their high J.D. Power settlement scores, USAA members consistently report feeling they received a fair value for their totaled vehicle. They are less likely to push for aftermarket parts and are more focused on getting the repair done right. They aren't perfect, of course. No insurer is. You can find complaints about USAA's claims process if you look. But the sheer volume and severity of those complaints pale in comparison to what you'll find for many of their publicly traded rivals. Let's be fair, the competition isn't sitting still. Progressive has invested billions into technology, making their app-based claims process one of a kind. For a simple fender bender, you can file a claim, upload photos, get an estimate, and even get paid, sometimes in less than a day without ever speaking to a human. For people who value speed and digital convenience above all else, this is incredibly appealing. Geico is also known for its speed and efficiency, a well-oiled machine designed to process a high volume of claims quickly. State Farm, with its massive network of local agents, offers a personal touch that many people crave. You can walk into your agent's office and have them help you start the process. But the question isn't just about speed or convenience. It's about trust. When your car is wrecked, when you might be injured, when you're navigating a complex and stressful situation, who do you trust to have your back? Do you trust the algorithm designed for maximum efficiency? Do you trust the company legally obligated to prioritize shareholder profits? Or do you trust the member-owned organization whose entire brand is built on a promise of service and loyalty to a specific community? The claims process is the core of the insurance promise. It's the product you hope you never have to use, but it's the only part that truly matters when you do. The price you pay is just the entry fee. The peace of mind you get from knowing you'll be taken care of when things go wrong. That's the real value. And while competitors can compete on price, and many do, replicating the culture and trust that USAA has built into its claims experience is a much taller order. So we've seen how these companies perform after a disaster. But what about before? How do they help you avoid that disaster in the first place? And more importantly, how do they save you money when you're a safe driver? Because the best claim is the one that never has to be filed. Next, we dive into the world of discounts, driver tracking programs, and the technology that separates the cheap from the truly valuable. Discounts are the language of the insurance industry. They're the promises whispered in every commercial, the bullet points on every website. But a long list of discounts doesn't automatically mean you're getting a better deal. It's about which discounts you actually qualify for, and how deep those cuts really go. Let's start with USAA. Their approach is less about a shotgun blast of 100 tiny discounts and more about a targeted rifle shot, aimed directly at their core audience, the military community. First, the obvious ones. The Safe Driver Discount, or Premier Driver Discount as they call it. If you maintain a clean record for more than 5 years, you get a significant reduction. This is standard, but USAA's discount is often reported by members to be quite substantial. Then there's the Good Student Discount. If you have a young driver on your policy who's a full-time student with a B average or better, you save. Again, this is common, but it's a critical one for families. Where USAA starts to pull away for its members are the military-specific savings. The vehicle storage discount is huge. If you're deployed overseas or have to store your car for 30 days or more, you can slash your premium by up to 60%. This is a benefit almost no civilian-focused company can or will offer. It's a direct acknowledgement of the realities of military life. There's also a discount for garaging your vehicle on a military base, which is considered a more secure environment. It's a small thing, but these small things add up. And of course, there's the loyalty factor. The longer you're a member with USAA, the more your savings can grow through their subscriber savings accounts, which we touched on earlier. But it's also about the bundle. USAA desperately wants you to have your auto, home, or renters, and maybe even your banking with them. Their multi-policy discount is aggressive, and is one of the primary ways members see those rock-bottom rates they're famous for. Now let's pivot to the competition. How do they stack up? Take Geico. Their whole brand is built on 15 minutes could save you 15% or more. Part of how they do that is with an absolutely massive list of discounts. Yes, they have the Good Driver and Good Student discounts, but they also have discounts for federal employees, which can appeal to a similar, government-oriented demographic as USAA. They have discounts for being a member of certain alumni associations, professional organizations, and fraternities. If you're an Eagle Scout, there might be a discount. If you're a member of the National Society of Professional Engineers, there might be a discount. Their strategy is breadth. They cast a wide net, hoping you'll qualify for 3 or 4 of these smaller, niche discounts that, when combined, make a real difference. Then you have Progressive. They're the innovators, the tech-forward disruptors. While they have the standard bundle and Safe Driver discounts, their entire identity is wrapped up in the concept of rate suckers and personalizing your rate. This brings us to the biggest battleground in modern car insurance: telematics, the spy in your car, or, as the insurance companies call it, usage-based insurance. This is the technology that promises to finally reward you for how you actually drive, not just how a demographic table says you should drive. It's a trade. You give the insurance company your driving data, and in return they give you a potentially huge discount. USAA's program is called Safe Pilot. It's an app on your phone that runs in the background, using your phone sensors to track your habits. It's looking for a few key things: hard braking, fast acceleration, and this is the big one, your phone usage while driving. Are you texting, talking, or otherwise fiddling with your phone? Safe Pilot knows. It also tracks the time of day you drive and your total mileage. At the end of your policy period, you get a discount based on your score, which can be up to 30%. A crucial feature of Safe Pilot is that USAA promises your rate will not go up based on the data. Can only help you. It's a one-way street towards savings, which removes a lot of the fear for hesitant drivers. Progressive Snapshot is the original, the one that started it all. It can be a plug-in device for your car's OBD2 port or a mobile app, similar to USAA's. It tracks much of the same data: hard braking, acceleration, mileage, and time of day. But here is the monumental difference. In many states, Snapshot can and will raise your rates if it deems you a risky driver. That 30% savings they advertise is the carrot, but the stick is a potential surcharge. This makes Snapshot a much bigger gamble. You're not just trying out a program for a discount, you are actively auditioning for a lower rate, and if you fail the audition, you could end up paying more. State Farm's program is called Drive Safe and Save. It also uses a mobile app, but it often pairs with a small Bluetooth beacon you stick in your car. This helps it more accurately know when you're actually the one driving. It tracks similar metrics: acceleration, braking, cornering, speed, and phone use. Like USAA, State Farm emphasizes that this is primarily a discount program, with savings up to 30%. They are much less likely to penalize you for bad driving compared to Progressive, putting them somewhere in the middle ground. So who wins the tech war? It depends on your philosophy. USAA's SafePilot offers a risk-free path to a substantial discount. You can't lose. This fits perfectly with their brand of trust and member-centric service. Progressive Snapshot is for the confident driver, the one who is absolutely certain they are better than average and is willing to put their money where their mouth is to prove it. The potential reward is high, but the risk is real. State Farm offers a solid, less risky alternative that's a good middle-of-the-road choice. But even beyond the sci-fi world of telematics, there's one discount that rules them all: the bundle. Insurers don't just want your car. They want your house, your apartment, your boat, your life. The multi-policy discount is the single biggest discount most people will ever get. Why? Because a customer with multiple policies is a sticky customer. The hassle of moving 2 or 3 policies is much higher than moving just one, so you're less likely to shop around every year. This is another area where USAA shines. Because they're not just an insurance company, they're a full-service financial institution. You can bundle your auto insurance with renters or homeowners insurance for a discount of up to 10%. But you can also have your checking and savings accounts, your credit cards, your mortgage, your personal loans, all under one roof. While these don't all directly discount your car insurance, they create an ecosystem that is incredibly convenient and fosters immense loyalty, making the insurance component feel like part of a larger, trusted relationship. Competitors are just as aggressive. State Farm and Allstate, with their local agent models, are masters of the bundle. They want to be your family's one-stop shop for all things insurance. Geico and Progressive also offer significant multi-line discounts, partnering with other companies to offer homeowners and renters policies. But here's the pro tip the insurance companies don't want you to focus on. Bundling is not always cheaper. Sometimes the discount you get for bundling is less than the savings you could get by cherry-picking the best company for each individual need. You might find that USAA has the best auto rate for you, but that another company like Lemonade offers a renter's policy for half the price. Doing the math is critical. The convenience of a single bill can sometimes mask a higher overall cost. So, when we tally the score on discounts and technology, it's not a simple knockout. USAA offers a deep but narrow set of discounts perfectly tailored to the military lifestyle, with a risk-free high-value telematics program. Geico offers a sprawling menu of affiliations and niche savings for the diligent bargain hunter. Progressive bets it all on technology and the confident driver's willingness to gamble. Discounts and fancy apps are great when the sun is shining. They make you feel smart, like you're winning the game. But what happens when you're standing on the side of the road, watching smoke pour from your engine? When you actually need your insurance to be insurance. That's when the marketing stops and the real test begins. Next, we pull back the curtain on the claims experience. The moment of truth that defines whether your insurer is a trusted partner or just another bill you pay every month. The sound of crunching metal and shattering glass is a sound you never forget. In that split second, your world is turned upside down. Your heart is pounding, adrenaline is coursing through your veins, and 100 questions flash through your mind. Is everyone okay? What just happened? What do I do now? And then a crucial one: will my insurance company have my back? This is the moment of truth. All the clever commercials with talking geckos and catchy jingles fade into oblivion. All the promises made on a slick website are put to the ultimate test. This is when you find out if you've been paying for a true safety net or just a piece of paper. A perfect claims process feels almost magical. You make one phone call or open one app. A calm, empathetic voice on the other end says, "Don't worry, we've got this." And they actually mean it. A tow truck is dispatched immediately. A rental car is arranged and waiting for you before you even get home. An adjuster contacts you promptly, not to argue but to help. They explain the process clearly, set realistic expectations, and then exceed them. The repairs are handled by a trusted shop, the payments are made seamlessly, and you're back on the road with minimal disruption to your life. The entire ordeal, while stressful, is made manageable because you had a powerful ally in your corner. That's the dream. But how often is it the reality? For decades, USAA has built its entire brand, its very identity, around this dream. The legend of USAA's claims service is practically folklore in military circles. You'll hear stories of service members deployed overseas whose spouses get into an accident back home, and USAA doesn't just fix the car. They practically become a temporary support system, ensuring the family is taken care of. They're known for cutting checks on the spot, for trusting their members, and for consistently choosing the path of least resistance for the customer. Their internal mantra is legendary: do the right thing. And for the most part, their reputation is backed by data. Year after year in J.D. Power's auto claim satisfaction study, USAA consistently receives the highest score. Now, because of their closed membership, they aren't officially included in the rankings, but the score itself tells the story. They set the bar that everyone else is trying to reach. Their members report feeling like they're being treated like a person, not a policy number. The process is streamlined through their app, but there's always a knowledgeable, US-based representative ready to help. This isn't just about processing a claim, it's about crisis management. But let's be clear, the competition has not been sleeping. They know that a bad claims experience is the #1 reason a customer will switch insurers. And they've invested billions to close the gap. Take Progressive. They looked at the single biggest hassle in the claims process, juggling adjusters, repair shops, and rental cars, and they engineered a brilliant solution: their concierge claims service. You have an accident, you drop your damaged car off at one of their service centers, and you drive away in a rental car on the spot. They handle everything else. They manage the repairs, they guarantee the work for as long as you own the car, and they call you when it's ready. It is a remarkably seamless white glove experience. For someone who values convenience and wants to outsource the entire headache, this is a massive, almost unbeatable value proposition. It directly challenges USAA's service-oriented model by creating a system that, for many, is even easier. Then you have State Farm, the gentle giant. Their power lies in their massive network of local agents. When you have a claim, you're not calling an 800 number and talking to a random person in a call center 1,000 miles away. You're calling Dave, the guy whose kid plays on the same soccer team as yours, the person you see at the grocery store. That agent acts as your personal advocate, your guide through the often confusing claims labyrinth. They can explain your coverages, help you with paperwork, and liaise with the corporate claims department on your behalf. For millions of Americans, that human connection, that good neighbor promise, is the ultimate form of security. It's a fundamentally different approach from USAA's more centralized, direct-to-consumer model. It's high-touch versus high-tech, and for many, touch wins. And what about Geico? Their strength is speed and digital efficiency. Filing a claim through their mobile app is incredibly easy and fast. You can upload photos, schedule an inspection, and get the process moving in minutes right from the side of the road. For simple, straightforward claims, a cracked windshield, a minor fender bender with no injuries, their system is a well-oiled machine. It's fast, it's transactional, and it gets the job done with minimal fuss. The potential weakness emerges when things get complicated, when injuries are involved, when fault is disputed, or when you're dealing with a total loss. The highly automated, hands-off approach can sometimes feel cold and impersonal. Suddenly, you might find yourself wishing for the dedicated support of a USAA rep or the personal advocacy of a State Farm agent. Let's put this to the test with two scenarios. First, the simple rear-end collision. You're stopped at a light, and someone taps your bumper. No one's hurt, but you need a new bumper cover. With Geico, you snap a few photos, file on the app, and a check might be deposited in your account in a day or two. With Progressive, you might use their photo estimate tool or take it to a network shop and it's handled. With State Farm, you call your agent, they walk you through it. With USAA, a similar app-based or phone call process gets it done quickly. In this case, the differences are more about preference than outcome. All the major players handle these minor claims reasonably well, because it's in their financial interest to do so efficiently. But now let's change the scenario. You're in a serious accident. Your car is totaled. It's a twisted wreck on the side of the highway. This is where an insurer earns their keep. The process is no longer about just fixing a bumper. It's about determining the actual cash value of your car, paying off your auto loan, potentially dealing with gap insurance, and getting you the funds to buy a new vehicle, all while you're likely shaken and trying to get your life back in order. This is where the horror stories come from. This is where you hear about people fighting for weeks with an adjuster over a few $100s on the value of their car, feeling like they're being nickel and dimed by the very company they paid to protect them. In this high-stakes scenario, USAA's member-focused philosophy often shines brightest. Their adjusters are frequently praised for being fair on total loss valuations and for helping members navigate the complexities of paying off a loan and titling a new car. The focus is on getting the member whole again. Competitors can be much more of a mixed bag. While some adjusters at the big companies are fantastic, their system is often built around a primary goal: cost containment. This can lead to lowball offers on your car's value, arguments over comparable vehicles, and a drawn-out adversarial process that adds immense stress to an already traumatic situation. Progressive's concierge service is less of a factor here since the car isn't being repaired, and State Farm's agent can be a huge asset, but they're still working within the confines of State Farm's corporate claims policies. The ultimate takeaway on claims is that reputation matters, but it isn't everything. USAA has earned its stellar reputation by consistently delivering a supportive, fair, and human-centric experience, especially when the chips are down. However, the competition is fierce and innovative. Progressive's concierge service offers a level of convenience for repairs that is arguably best in class. State Farm provides a personal, agent-driven relationship that no direct-to-consumer company, including USAA, can truly replicate. And for the digitally savvy person with a simple claim, Geico's speed is undeniable. The right choice depends on what you fear most and what you value most in a crisis. Do you want the convenience of a one-stop shop, the comfort of a local agent, or the deep-seated trust that comes from a company built around a culture of service? But this world-class service, this legendary peace of mind, it has to come at a price, right? Or does it? The answer is far more complicated than you think. Because when we peel back the layers of pricing and navigate the labyrinth of hidden discounts, the company that seems most expensive might just save you the most money. And that's where we're going next. Let's start with a simple universal truth of car insurance. The price you are first quoted is almost never the price you should pay. That initial number is just a starting point. It's an opening bid in a complex negotiation you're having with an algorithm. Your job is to win that negotiation. And you win by mastering the art of the discount. This isn't just about saving 5 or 10%. This is about fundamentally changing the entire value equation, turning the most expensive-looking option into the undeniable champion of your wallet. To do this, we have to think like the insurance companies themselves. They group discounts into 3 main categories. Discounts about you, the driver. Discounts about your CR. And discounts about your policy itself. This is the 3-front war you have to wage to get the best possible price. Let's start with the driver. Every major insurer, USAA, Geico, Progressive, State Farm, will sing from the rooftops about their safe driver discount. But what does that actually mean? For most, it means you haven't had an at-fault accident or a major violation in the past 3 to 5 years. The discount can be substantial, often between 10 and 25%. But here's the first divergence. Some companies like Progressive have their snapshot program, where they actively monitor your driving through an app or a plug-in device. They're tracking your braking, your acceleration, the time of day you drive. Do well and you can get a significant discount. But drive poorly, and in some states they can actually raise your rates. It's a high-risk, high-reward game. USAA, on the other hand, takes a more traditional approach with their Safe Pilot program. It also uses an app, but the focus is more on rewarding good habits than punishing bad ones. Critically, in most states, USAA guarantees your rate won't go up based on the data. You can only earn a discount. For a driver who is confident but doesn't want to risk a penalty for a few hard breaks in city traffic, USAA's approach feels safer, less like a gamble. Then we have the classic good student discount. This is a goldmine for families with teens or college-age drivers. A young driver can double or even triple a family's premium, so any discount here is massive. Most companies offer something if the student maintains a B average or a 3.0 GPA, but the amount varies wildly. Geico might offer up to 15%. State Farm can go as high as 25%. But USAA often combines this with another powerful and often overlooked factor: the student away at school discount. If your child is at a college over 100 miles away and doesn't take a car with them, USAA can offer a huge reduction because the risk of them driving the insured vehicle plummets. When you stack the good student discount on top of the student away discount, USAA can often neutralize the high cost of a young driver better than anyone else. Now let's move to the second front: the vehicle itself. This is where the safety features on your car become your secret weapon. You know the basics: anti-lock brakes, airbags, daytime running lights. Everyone gives you a small credit for those, but the real savings are in the new, advanced safety features. We're talking about blind spot monitoring, lane keep assist, and especially automatic emergency braking. Here's the inside scoop. Insurance companies get data on which features actually prevent accidents, and they are beginning to reward drivers for them. A company like USAA, which insures a massive number of military families who tend to buy reliable, safe, and often newer American or Japanese cars, has a deep well of data on this. They may offer a more significant discount for a car loaded with modern safety tech than a competitor who is slower to adapt their pricing models. So if you're driving a newer car, you have to specifically ask about discounts for every single safety feature. Don't assume they're automatically applying them. And don't forget the simple stuff. An anti-theft device, even a simple VIN etching on the windows, can knock a few percentage points off your comprehensive coverage. For USAA members, there's a unique one: the Garaged on Base discount. If you live on a military installation, which is a secured and controlled environment, they see that as a lower risk for theft and vandalism, and they'll give you a discount that simply doesn't exist at Geico or Progressive. But the final front, the policy discounts, is where the war is truly won or lost. This is where you can slash your premium by a third or even more. The undisputed king of all discounts is the multi-policy or bundling discount. Combining your auto insurance with your home, renters, or even life insurance policy is the single most effective way to save money. Every company offers this, but their generosity is not equal. Geico and Progressive are famous for their aggressive bundling discounts, often advertising savings of 20 or 25%. And they are fantastic. But this is where USAA's business model gives it a hidden advantage. USAA's core products are not just insurance. They are deeply integrated into banking, investments, and home loans. Their goal isn't just to sell you a policy. It's to become your entire financial institution. Because of this, their incentive to get you to bundle is enormous. And for longtime members, the loyalty factor amplifies this. Let's create a real-world scenario. Meet the Miller family. They're a 20-year Army veteran household, homeowners with 2 cars and a teenage driver. Their initial quote from Progressive is $2,400 a year. Their quote from USAA is $2,800 a year. On paper, Progressive is the clear winner by $400. But now we apply the discounts. Progressive gives them a 15% bundling discount for their home insurance. That's a $360 savings. Their new total is $2,040. Not bad. Now let's run the gauntlet with USAA. First, the 25% bundling discount for their USAA homeowners policy. That slashes $700 right off the top. The price is now $2,100. Still slightly more expensive than Progressive, but we're not done. They get the good student discount for their teen, which is another 10%, saving $210. Now they're at $1,890. They've just leapfrogged Progressive. But wait, there's more. Because they've been members for over 20 years, they get a premier driver and loyalty discount, which shaves off another 10%. Now they're at $1,701. And finally, because they garage their cars on a military base, they get another 15% discount on their comprehensive coverage. After all is said and done, their final bill is closer to $1,600 a year. They started out looking $400 more expensive than Progressive, and ended up being $440 cheaper. That's a swing of over $800. This is the power of navigating the labyrinth. The sticker price was an illusion. The real price was hidden beneath layers of discounts that were uniquely tailored to their life and their loyalty. This is the fundamental difference. Competitors like Geico and Progressive are brilliant at marketing low introductory rates. They cast a wide net to attract as many people as possible. USAA, by its very nature, is a niche provider. Their deepest and most powerful discounts are reserved for the military community they serve. Discounts like the legacy discount: if your parents were members, you get a discount. Or the massive rate reduction up to 60% if a service member is deployed overseas and their car is in storage. No other mainstream competitor can or will match that. So when we ask who offers better value, the answer depends entirely on who you are. For the general public, the discount battle between Progressive, State Farm, and Geico is a fierce one, often coming down to who is having a better sales quarter in your specific zip code. But if you are eligible for USAA, their unique, overlapping, and stackable discounts create a value proposition that is incredibly difficult for any other company to beat. The initial quote might not tell that story. It might even tell you the opposite. But the initial quote isn't the story. It's just the first page. The real story is written in the fine print of the discounts. But there's another story, written in even finer print, that's arguably more important. Because after you've secured the absolute lowest price, you have to ask the terrifying question: what did I actually just buy? What happens when you need to use this thing? Because a cheap policy that doesn't cover you when you need it most isn't a good value. It's a catastrophe waiting to happen. And that's where we're going next. Into the weeds of coverage options, where a single paragraph of text can be the difference between financial security and financial ruin. So let's pull back the curtain on what you're actually buying. Think of your car insurance policy not as a piece of paper, but as a suit of armor. And just like real armor, not all of it is created equal. Some policies are like cheap plastic Halloween costumes. They look the part, but they'll shatter on first impact. Others are like custom-forged steel designed to take a hit. The difference is in the details, the specific coverages you choose. First, let's talk about the absolute bare minimum, the part you're legally required to have: liability coverage. This is the most misunderstood part of any policy. Liability coverage isn't for you. It's for the person you hit. It pays for their medical bills, their lost wages, and the repairs to their car. Every state has a minimum amount you have to carry, and frankly, those minimums are a joke. In some states, the property damage minimum is as low as $5,000 or $10,000. What happens when you slide on some ice and your Honda Civic taps the bumper of a brand new Mercedes S-Class? That bumper alone, with its sensors and cameras, can be a $10,000 repair. If you only have the state minimum, guess who's getting a letter from their lawyer for the rest of the bill? You are. This is a fundamental philosophical difference you see between USAA and many of its high-volume, online-focused competitors. When you go through the quote process with Geico or Progressive, it's incredibly easy to just click State Minimum. They put the choice in your hands, which sounds great, but it also allows you to make a financially devastating mistake without even realizing it. USAA, on the other hand, often defaults to suggesting much higher, more responsible limits. Their representatives are trained to explain why carrying only $25,000 in bodily injury liability is a catastrophic risk in a world where a single night in the ER can cost more than that. They aren't just selling you a policy. They're trying to manage your risk. That guidance itself is a form of value that doesn't show up on the price tag. Next up are the two coverages for your car: collision and comprehensive. Collision is simple. It pays to fix your car if you hit something, whether it's another car, a pole, or a guardrail. Comprehensive is for almost everything else: theft, vandalism, fire, hail, a deer deciding to redesign your front end. This is where the deductible comes into play. That's the amount you pay out of pocket before the insurance kicks in. Here again, the details matter. Many companies, including Progressive and Allstate, offer a vanishing deductible, where they reduce your deductible every year you go without a claim. USAA has a similar program. This is a great perk, a tangible reward for safe driving. But the real hidden gem to look for is glass coverage. A tiny rock chip can splinter into a massive crack overnight, and modern windshields with built-in sensors for cruise control and lane assist can cost over $1,000 to replace. USAA is legendary for its glass coverage. On many of their policies, you can get a full windshield replacement with a $0 or $50 deductible. Compare that to a competitor where you might have to pay your full $500 or $1,000 comprehensive deductible for the exact same repair. If you live in a state like Arizona with lots of gravel on the roads, or Colorado with its notorious hailstorms, that one single policy feature could save you $1,000 in a single incident. That's real value. Now we move beyond the basics into the coverages that I believe are non-negotiable. These are the pieces of the armor that protect you from the worst-case scenarios. And the king of them all is uninsured and underinsured motorist coverage. Remember how liability covers the other guy? Well, this covers you when the other guy has no insurance or not enough insurance. The statistics are terrifying. The Insurance Research Council estimates that 1 in 8 drivers on the road is uninsured. That's nearly 13% of people driving around with absolutely no way to pay for the damage they cause. Imagine this: you're stopped at a red light. Someone texting and driving slams into you from behind. Your car is totaled, and you have serious injuries requiring surgery and months of physical therapy. Your medical bills are $150,000. Then you find out the driver who hit you was illegally driving a friend's car and has zero insurance. Without uninsured motorist coverage, you are on the hook for every single penny of your own medical bills. Your life is turned upside down because of someone else's irresponsibility, and you have no recourse. This coverage is what steps in to pay for your medical bills, your pain and suffering, and your lost wages, just as if the at-fault driver had a great policy. USAA agents will almost always push you to match your uninsured motorist limits to your own liability limits. They know it's the single most important thing you can do to protect your own family. Some competitors, again, make it an easy-to-miss checkbox in an online form. Skipping it might save you $10 a month, but it exposes you to financial ruin. Let's talk about a less dramatic but incredibly important add-on: rental reimbursement. If you get into an accident, your car could be in the shop for weeks, especially with today's supply chain issues for parts. How do you get to work? How do you take your kids to school? Rental cars are expensive. A policy that saves you $15 a month but only gives you $20 a day for a rental is useless. That won't even cover the taxes and fees on a compact car in most cities. You'll be paying $30 or $40 a day out of your own pocket. USAA and other top-tier insurers like State Farm typically offer much more realistic limits, like $40 or $50 a day, for only a few dollars more per month. More importantly, they have direct billing relationships with companies like Enterprise. So you just show up, get your keys, and USAA handles the bill. No credit card holds, no out-of-pocket expenses. That convenience in a moment when you are already stressed out is immense. And finally, let's touch on a true game changer: accident forgiveness. For years, the rule was simple: you cause an accident, your rates go up. A lot. For 3 to 5 years. One mistake could cost you thousands of dollars in increased premiums. Accident forgiveness is a get-out-of-jail-free card for your first at-fault accident. USAA has one of the most respected programs. Typically, after you've been a loyal claim-free member for a number of years, they grant it to you. It's a reward for your loyalty. Other companies like Liberty Mutual or Allstate might allow you to purchase it from day one. There's a trade-off. Do you want to earn it or buy it? But having it in your back pocket provides incredible peace of mind. It turns a potentially multi-thousand-dollar mistake into a non-event for your premium. So when we talk about value, it's not about the number at the bottom of the quote. It's about the strength of the liability shield protecting your assets. It's about whether a broken windshield is a minor inconvenience or a major expense. It's about whether you're protected from the massive risk of an uninsured driver. It's about having a rental car ready for you. No questions asked. A cheap policy is often a weak policy, a suit of armor full of gaps. A true value policy is the one that has you covered from every angle, even the ones you never thought to look for. But all of this is just theory. It's just words on a policy document. The real test, the moment of truth for any insurance company, comes when you actually have to use it. What happens when you pick up the phone to file a claim? Are you met with compassion and efficiency, or with suspicion and bureaucracy? That process, the claims experience, is where the true character of a company is revealed. And that's exactly where we're going next. The sound of crunching metal and shattering glass. It's a sound that stops time. In that split second, your heart hammers against your ribs, your world shrinks to the twisted steel around you, and a single terrifying thought floods your mind. What happens now? This is the moment of truth. Every dollar you've ever paid in premiums, every renewal notice you've ever signed, it all comes down to this. The promises made in a 30-second commercial are now being put to the ultimate test. For decades, the stories about USAA's claims process were spoken like legends in military circles. A level of service so profoundly different, it almost sounded too good to be true. And year after year, the data backs it up. J.D. Power, the gold standard for customer satisfaction rankings, consistently places USAA at the very top for auto claims satisfaction. In fact, their scores are often so high that J.D. Power has to list them as ineligible for ranking, alongside the others, simply because their closed membership model makes it an unfair fight. They aren't just winning the race. They're running on a completely different track. But what does that actually feel like? Imagine you're that person standing on the side of the road, dazed and shaken. You pull out your phone, your hands trembling as you open the USAA app. You tap report a claim. Within minutes, a real human being is on the line. Not a robot, not a confusing phone tree. Person. And their first words aren't, "What's your policy number?" They're, "Are you okay? Is everyone safe?" There's an immediate sense of calm. They don't treat you like a liability. They treat you like a member of the family who's in trouble. They tell you exactly what to do, what photos to take. They arrange the tow truck. Before you've even finished talking to the police officer, a text message arrives. Your rental car is confirmed and waiting for you. The next day, an adjuster calls. They've already reviewed the initial report. They explain the process, set clear expectations, and give you their direct contact information. There's no runaround, no endless transfers, just a single point of contact, a partner dedicated to getting your life back to normal. The payment for repairs often hits your bank account via direct deposit before the body shop has even finished the official estimate. This isn't an exaggeration. This is the standard, oft-repeated experience of a USAA member. It's a process designed around one core principle: removing stress from the most stressful situations. Now let's rewind that scene. Same accident, different insurance card in your wallet. Maybe it's Geico, Progressive, or State Farm. You make the call. First, you're met with an automated system. For a new claim, press 1. You press 1. You listen to hold music for 10 minutes. Finally, an agent picks up. They're professional, but it's scripted. They gather the information, assign you a claim number, and tell you an adjuster will be in contact within 24 to 48 hours. The empathy feels manufactured. You're no longer a person. Your claim number 8-Charlie7-2-9. The next day, the adjuster calls. They're polite, but they're managing hundreds of other claims. Their goal is efficiency, which often translates to cost containment. They strongly urge you to use one of their network-approved repair shops. Why? Because those shops give the insurance company a discount on labor and often agree to use aftermarket or salvaged parts instead of brand new, original equipment manufacturer, or OEM parts. If you want your car repaired with the same quality parts it was built with at the factory, you might have to fight for it. You might have to pay the difference out of your own pocket. Suddenly, the process becomes adversarial. You're not partners, you're negotiators. Every conversation is a delicate dance. The initial estimate from their app's photo tool seems low. The body shop finds additional damage once they take the bumper off. And now your adjuster has to reapprove the supplement, adding days, even weeks, to the repair time. You're calling them for updates, leaving voicemails that go unreturned. The rental car coverage is about to run out, but your car is still in pieces. This is the friction. This is the bureaucracy. This is where a low premium can suddenly feel incredibly expensive, paid for with your time, your stress, and your sanity. This isn't to say that every claim with a major competitor is a nightmare. They successfully process millions of claims every year. But the system is built on a different foundation. For these massive, publicly traded companies, the primary duty is to their shareholders. The goal is to maximize profit, and one of the biggest levers they can pull is minimizing claim payouts. This leads to an industry culture sometimes referred to as delay, deny, defend. Delay the payment as long as possible, deny aspects of the claim that are ambiguous, and defend their position vigorously if the customer pushes back, knowing that many will simply give up. USAA, on the other hand, is a member-owned insurance exchange. Its primary duty is to its members. Its profits are either reinvested into the company to improve service or returned to the members in the form of distributions and dividends. This fundamental difference in corporate structure changes everything. It realigns the incentives. The goal isn't to pay as little as possible. It's to honor the promise made to the member, because the member is the owner. The human element is the ultimate differentiator. The adjuster you get from Progressive might be a fantastic person, but they are operating within a system that incentivizes them to close claims quickly and cheaply. They have performance metrics based on claim severity, which is just corporate speak for how much money they paid out. The USAA adjuster is measured differently. Their performance is tied to member satisfaction. They are empowered to make decisions on the spot to help you. They can approve an OEM part without needing 3 levels of management sign-off. They can extend your rental car coverage because they understand that supply chain issues are delaying parts. They are trained to find a way to say yes. Think about the value of that. The value of not having to become an expert in auto body repair overnight. The value of not having your stomach drop every time an unknown number calls, fearing it's another battle with your insurance company. The value of making one phone call and knowing with absolute certainty that everything will be taken care of. That peace of mind is the hidden, unlisted benefit on your policy declaration page. It's what you're truly paying for. And in this arena, the claims experience, USAA doesn't just offer better value than its competitors. It operates in a different league entirely. It delivers a service that its rivals, with their conflicting duties to shareholders, are structurally incapable of matching. So, when it comes to the moment of truth, USAA stands tall. Case closed, right? USAA is the undisputed champion. Well, not so fast. Because the claims experience is only one part of the story. What happens after the claim is paid? What happens to your premium at your next renewal? The world of accident forgiveness, rate increases, and long-term policy impacts is a murky one. And it's here that the value equation can suddenly get a lot more complicated. The company that was your savior one day could become your financial burden the next. And the differences we found there are not what you'd expect. You'd expect the budget-friendly insurers, the ones who spend billions on catchy commercials, to be the ones who hammer you with a massive rate hike after your first claim. It makes sense, right? Lure you in with a rock-bottom price, and the moment you actually use the service you're paying for, they make their money back and then some. And you'd expect a premium, member-focused company like USAA to be the most forgiving, to understand that accidents happen, and to stand by their loyal members. That is the logical expectation. But the reality of post-claim rate increases is a carefully constructed system of algorithms and financial projections, and loyalty often has very little to do with it. Let's start with the most common marketing gimmick in the industry: accident forgiveness. Sounds wonderful, like a get-out-of-jail-free card for your driving record. USAA offers it. So do Geico, Progressive, and nearly every other major carrier. But forgiveness is a misleading term. It is not an act of grace. It is a product you pay for. For most companies, including USAA, you either have to be a long-term customer with a pristine record, say 5 years claim-free, to earn it, or you have to purchase it as an add-on to your policy. You are, in essence, prepaying for your first mistake. The real question isn't whether it exists, but how much it costs you up front and how it compares to the alternative. A company with a lower base rate that might not offer forgiveness but has a more reasonable rate increase if something does happen. This is where we peel back the final layer of the onion. We analyze industry data and consumer reports to model what happens to your premium after one single, at-fault accident. Let's use a common scenario. A minor fender bender, causing about $2,000 in damage with no injuries. It's the kind of thing that happens every day in every city in America. With Geico, our research shows an average national rate increase of around 45%. That 6-month premium of, say, $700 can suddenly become over $1,000. And that increase typically stays on your record for 3 years. Do the math. That's an extra $600 a year for 3 years. Your $2,000 claim just cost you an additional $1,800 in premiums. Progressive is often even more severe. Their snapshot program might give you a discount for good driving. But the moment you have an at-fault claim, the algorithm can be ruthless. We saw average increases in the 50 to 60% range. They are a data company at their core, and their data tells them you are now a significantly higher risk, and they will price you accordingly immediately. Your loyalty and past driving history suddenly feel irrelevant in the face of the new data point you just gave them. Now let's look at the traditional players. State Farm often shows a more moderate initial increase, typically in the 25 to 35% range. This is where the value of an agent is supposed to shine. They can't stop the increase, that's determined by a central underwriting system, but they can walk you through it and review your policy for other discounts you might now qualify for to soften the blow. It's a better customer experience, but the financial hit is still very real. So where does USAA fit in? Their reputation suggests they would have the smallest increase, and in many cases that's true. For a long-term member with an otherwise spotless record, the increase can be as low as 20%, significantly below the industry average. For these members, USAA's value proposition holds up perfectly. They pay a fair premium, get great service, and are shielded from the worst of the financial fallout after a claim. This is the ideal USAA experience. However, it is not the universal USAA experience. For newer members or members who have had even a minor claim in the past 5 years, the story changes dramatically. We found instances where USAA's rate increase was on par with Geico's, soaring past 40%. Why? Because behind the curtain, all insurance companies operate on a similar principle. It's called a surcharge schedule. Think of it like points on your driver's license, but it's an internal system unique to each company. Every type of violation or claim is assigned a point value. A speeding ticket might be 1 point. A reckless driving charge could be 4 points. An at-fault accident is often 3 points. Your base rate is multiplied by a factor determined by your total number of points. A clean record means 0 points, and a factor of 1.0. But an accident might push your factor to 1.4, resulting in that 40% increase. The secret is that the surcharge schedule, the number of points assigned and the percentage increase per point, is different for every single company. And this is where the real value is either created or destroyed. Company A might have a steep 50% surcharge that only lasts for 3 years. Company B might have a gentler 35% surcharge, but it stays on your record for 5 years. Over the long term, the gentler company could actually cost you more money. USAA's system is generally more lenient on the points it assigns, especially for that first claim for a tenured member. That's where their reputation comes from. But the multiplier effect can still be substantial if you don't fit that perfect profile. Their system is designed to heavily reward long-term, incident-free loyalty. If you are a new member, you haven't built up that loyalty capital yet, so the algorithm treats you more like a standard risk customer, similar to how Progressive or Geico would. This creates a massive divergence in value. If you're a 50-year-old veteran who has been with USAA for 20 years without a claim, your value proposition is off the charts. You get a rate increase that is likely half of what you'd see elsewhere. But if you're a 25-year-old active duty service member just signing up, and you have an accident in your second year, you might be shocked to see your premium double, just like it could anywhere else. You're paying for the brand and the service, but you're not yet getting the full benefit of their loyalty-based leniency. This is the critical detail that gets lost in the broad USAA's best narrative. The value you get from USAA in the aftermath of a claim is not fixed. It is a dynamic value that is directly proportional to the length of your loyalty and the cleanliness of your record with them. For the budget insurers, it's much simpler. Your record is your record, and they price the risk in front of them with very little weight given to how long you've been a customer. So the choice becomes a strategic one. Are you betting on your own perfect driving record? If so, a cheaper policy from Geico or Progressive might save you thousands over a decade, as long as that bet pays off. Or are you paying for a safety net? A higher premium with USAA or State Farm acts as a form of self-insurance against a massive rate hike. You're paying more now to guarantee you'll pay less later if something goes wrong. We've looked at the price you pay on day one. We've analyzed the service you get when you file a claim. And now we've seen the hidden financial penalty that comes after the claim is closed. Each piece of this puzzle, price, service, and penalty, is a critical component of total value. And for each company, the pieces are shaped differently. For some drivers, the pieces of the USAA puzzle fit together perfectly, creating a picture of unbeatable value. For others, those same pieces create a picture that is financially punishing and doesn't align with their needs at all. So we have all the data: the initial cost, the claims experience, and the long-term price of a mistake. We've laid it all out. But when you put these three critical pieces together, the final picture that emerges is not what you think. For a huge segment of the eligible population, choosing USAA is, without a doubt, the smartest financial decision they can make for their family. But for millions of others, and you may be one of them, it's a trap, a premium price for a service that won't deliver the value you expect when you need it most. And in the final part, we are going to tell you, with no ambiguity, exactly which group you fall into. The answer hinges on one crucial personal question: what does the word value actually mean to you? Because the truth is, USAA is not one single product. It's a different product for at least 5 different types of people. We're going to break them down right now, and you will see yourself in one of them. First, there's the core demographic, the career military member, the veteran, or their immediate family. If this is you, if you have a checking account with USAA, maybe a mortgage, if you understand the language and the culture of the military, then for you, USAA is almost certainly the undisputed champion. The value here isn't just a number on a premium statement. It's the ecosystem. It's the ease of bundling. It's the cultural affinity and the peace of mind that comes from dealing with a company that was literally built from the ground up to serve your specific needs. When you call, they get it. They understand deployments, PCS moves, and the unique financial landscape of military life. For this group, a competitor would have to offer a ridiculously, almost absurdly low price to justify severing that deep, integrated relationship. The premium you pay isn't just for insurance. It's for membership in a financial fortress built for you. For this profile, USAA isn't just the best value. It's often the only choice that makes holistic sense. But then there's the second profile: the young, eligible driver with a spotless record. Maybe you're the 25-year-old child of a veteran. You have no accidents, no tickets, and your primary goal is simple: find the absolute lowest price possible. For you, the story changes dramatically. Your perfect record makes you the ideal customer for every insurance company. They are all fighting for your business with a dizzying array of discounts. And this is where USAA's premium reputation can actually work against it. Companies like Progressive and Geico are masters of the discount game. They will throw everything at you: good student discounts, paperless billing discounts, pay-in-full discounts, and most importantly, massive discounts for using their telematics apps. While USAA's SafePilot is good, The initial savings offered by competitors are often more aggressive. For this rate shopping profile, USAA might be competitive, it might even be the cheapest in some states, but it is far from a guaranteed win. The value here is measured in pure dollars saved, and the loyalty and ecosystem benefits that are so crucial to the first group mean very little. For you, USAA is just one of many competitors in a brutal price war, and you should treat it as such. Now for our third profile, the driver with a complicated past. You've had an at-fault accident in the last 3 years, maybe a speeding ticket or two, or something more serious like a DUI. For this individual, the concept of value is simply about getting affordable quality coverage at all. And this is where USAA's exclusivity and risk aversion become a major hurdle. USAA has the luxury of being selective. They are ensuring a pool of generally lower risk drivers, which is how they keep rates competitive for their members. If your record is tarnished, you represent a higher risk. USAA may offer you a policy, but the premium could be astronomically high compared to competitors who specialize in pricing for risk. Companies like Progressive have built their entire business model on sophisticated data analysis, allowing them to precisely price a driver with 1 accident or 2 tickets. In many cases for this profile, USAA will be more expensive, and in some instances they may even deny you a policy outright. The value proposition completely collapses. Here, companies that are more forgiving and data-driven are almost always the better choice. The fourth profile is the tech-savvy pragmatist. You're a safe driver and you want to be rewarded for it right now. You aren't afraid of letting an app track your driving if it means saving 20 or 30% on your premium. You see insurance not as a relationship, but as a data-driven transaction. For you, the battle is fought in the arena of telematics. You need to compare USAA's SafePilot directly against Progressive Snapshot and Allstate's DriveWise. And frankly, the competition is fierce. While SafePilot is a solid program, competitors have been in this game longer and are often more aggressive with their upfront discounts to entice you to sign up. They might offer a guaranteed discount just for trying the program, with the potential for even deeper savings later. For this driver, the value is in maximizing the return on your data. The best option is to run the numbers. Get a quote from USAA with the SafePilot discount factored in, and get quotes from its top competitors with their telematics discounts applied. The winner will be crystal clear, and it will be based on cold, hard math, not on brand loyalty or reputation. Finally, we have the fifth profile, the peace of mind customer. This person is not a rate shopper. They might be older, more established, and their biggest fear is not overpaying by $10 a month. It's having a major claim denied or getting stuck in a bureaucratic nightmare after an accident. For this person, value is defined by one thing: claims service. This is USAA's legendary trump card. For decades, their reputation for a smooth, fair, and empathetic claims process has been the bedrock of their brand. You're paying a premium for the near guarantee that if the worst happens, USAA will have your back. You're buying an insurance policy against having to fight your own insurance company. For this profile, reading the horror stories about other insurers, the lowball offers, the endless phone trees, the outsourced adjusters, is enough to justify paying 10 or even 15% more for USAA. The value isn't in the monthly premium. It's in the payout when you need it most. If your number one priority is a hassle-free claims experience and you are willing to pay for that assurance, then USAA is, without question, one of the best, if not the best, options on the market. So who wins? USAA or its competitors? The answer is that it's the wrong question. The real question is, who are you? If you are a member of the military community looking for an integrated financial partner, USAA offers unbeatable value. If you are a price-sensitive shopper with a perfect record, you are doing yourself a disservice by not comparing USAA against the discount-heavy giants like Geico and Progressive. If you have a checkered driving record, USAA is likely not the place you'll find the best value, and you should look to companies more accustomed to pricing higher risks. If you are a data-driven driver who wants the biggest discount for your safe habits, you must compare the telematics programs head-to-head, because the best value is in the data. And if you are someone who prioritizes sterling, white-glove claims service above all else and is willing to pay a premium for it, USAA remains the gold standard and is likely worth every single penny. Value is not a universal constant. It's a personal calculation. Your final step is simple, but it is the most important one you will take. First, identify which of these profiles best describes you and your priorities. Second, get at least 3 quotes. If you're eligible, one must be from USAA. The second must be from a direct-to-consumer giant like Progressive. The third should be from a traditional, agent-based company like State Farm. Make sure the coverage limits and deductibles are identical across all quotes. Only then can you see the true cost. And finally, look at the recent claim satisfaction ratings, not from a national survey but for your specific state. Then, and only then, with your personal priorities in mind and real, comparable data in hand, will you know the answer. You will know who truly offers better value for you.